We're glad to have you back. Amid uncertainties in the global economy and rising insecurity in the country, the nation's stock market continued the bullish run, giving hope to its patient investors who endure long periods of downturn on the Nigerian Exchange Limited. After getting to a rock-bottom low for several years, the equities market have returned or recorded an unprecedented upbeat rally since the beginning of the year to emerge the best-performing market in Africa and the third in the world. The NGX All-Share Index, an indicator used to track the general market movement of all listed equities on the NGX, crossed 53,000 mark to hit the 14-year high for the first time since 2008, as indices soared significantly by 5.4 trillion naira from the beginning of the year. Meanwhile, negative sentiments have been dominating global equities as investors' appetite for risk assets was clouded by worries over rising global inflation, speedy interest rate hikes by major central banks, and China's reinforcement of its zero COVID-19 policy, which stoked concerns about global growth and the ongoing Russian-Ukraine crisis. Joining me again via Zoom from the United Kingdom is an investment manager and accountant, Mr. GBENGA OGUNRINOLA. Thank you so much for your time, sir. It's good to see you.
Thank you. It's nice being here again.
Yes, so far this year, businesses have recorded lower profits while growth forecasts have, of course, dropped. Is this a pointer to what we should expect at the year end?
Well, I think the Nigerian situation has been peculiar this year compared with what is happening in other parts of the world. And I believe that we'll see this sustained towards the end of the year and possibly entering 2023, which is a very prominent year for the Nigerian polity and economy. I think we are likely to see this sustained till then.
Okay, now global markets have also shown negative impacts from the war in Ukraine, as many markets posted negative figures and trade data. And how do we account for Ukraine and Russia market losses in global finances?
All right, so the global market has become interwoven such that what affects one market affects the other. If we look at the data for the first quarter, for example, we'll discover that almost every major market in the world had a decline in their analysis, and except for some few countries like Nigeria, and like you said in your opening remark, we have one of the best returns on investments in the African market and globally generally. But for the international markets, it's been a different story, and that's because of the way that the market is interwoven. What affects a particular country affects the others. For example, in the Eurozone, it's been a very bad year, bad quarter, and even up till now, they are still having the same effects. The inflation rates are on one of the highest level in many years. In the Eurozone, the inflation rates are about 7.5%. In the UK, it's estimated that before the end of the year, inflation rate might be as much as 9%. So these are things that they've not experienced before now, but it's all because of the Ukrainian war and because of the way the market is interwoven. The over-dependence on Russia in terms of energy and their oil has also affected the global market, which in a way has also affected our own inflation rates, because if we check the Nigerian inflation rates, it's at one of the highest level in recent years, about 16.82, as at the last time the CBN came up with the inflation rate for April. So we see the way the global market is interwoven, and what affects a particular region or country tends to affect the others. So that's the way it's been concerning the Ukrainian war.
Great stuff. We can see that the EU has also spent considerable amounts of military weapons and equipment in support of Ukraine. Now, my question really is, will the prolonged Russia-Ukraine war not disrupt European nations' economic growth and, by extension, global and economic development? Something is also happening in China.
Yeah, definitely it will. And that is the fear that most of these countries and regions have, and they are trying to mitigate the impact, because the effect itself is going to be far-reaching if nothing is done to reduce it. And I think that's what the European countries are trying to do, trying to mitigate the impact, trying to ensure that it does not escalate beyond what it is now, because if it does, then it's going to really affect the European region's economy, the world economy at large, and also our own economy one way or the other. So I think what they are just trying to do is to see how they can mitigate the impact. And if it continues longer than expected, then it's going to really affect the world economy seriously.
And in the current global setting, I would like you to, what could be Africa's agenda for sustainable development?
All right, so I want to believe that part of the things that the African community or countries need to do now is to look inward to see how they can be self-sustaining and not over-dependent on the Western world and the developed world, because currently the developed world are trying to manage themselves and the situation that they find themselves. And Africa has been at the receiving end over the years, and I think it's time we look inward. One of the things that is going well for the Nigerian economy, for example, now, is because it's been in a limbo for a long while. And so while the other economies are having it seriously bad, we are able to sustain ourselves one way or the other. But I think we need to look more inward, see what we can do internally for ourselves, how we can boost our economy with all the natural resources we have, and try to even get these things across to the other parts of the world.
All right, now coming back home, we have seen Nigerian market recording negative trends for 3 days. Are investors already been frightened by political activities ahead of the primaries?
No, I don't think so. I think it's just an issue of profit taking. When we look at the market, for a number of equities, it's really gone up when you compare what they were at the beginning of the year. For example, in the oil and gas industry, it's gone up by almost 50%. So generally, I think it's just it just makes sense, and it's just normal for investors to want to cash out, take profits, wait on the sideline, see what happens, and re-enter again. So I think that is the situation we are seeing in the Nigerian markets currently.
So I'm going to ask you, investment managers like you at this very critical time, what sort of advice are you giving investors? Yes, of course, some fund managers at this time. What are you telling them?
Yes, everybody needs to be careful. Look well before you leap. Things are still a bit murky and cloudy generally in the international markets. So it's good you take a close look at whatever level of now and the kind of asset class you are investing in. Even the well-known asset class that had been a bit immune to some of these downtrend when it comes to global impact has also been affected, like the bonds. In the US, for example, they've had it bad also in the area of the bond market, or fixed income market rather. So I think for investors generally, as an investment manager, I'll be advising companies, clients, that they should really look well before the leap. It's better you don't lose your money than for you to take a big leap and lose so much.
Also, we see the performance or activities from domestic investors in the Nigerian market. I'd like to ask you, when do you think that investors' confidence will fully return to the Nigerian space, despite all of the challenges that we face as a country?
All right, so I think one way or the other, we are getting it right in Nigeria, in the area of the economy, especially as it relates to the capital markets. Before now, we had the influx of foreign investors coming in to just cash in on what they can. They will buy stocks, and within a short while they will exit and dump the stock on Nigerians, and I think a number of them have left now. So what we are seeing is homegrown growth currently, and I think if this is sustained, we are having more investors actually investing in the market now for a longer term period, unlike what we had before that. It was a short term thing for everybody. So we are seeing more people coming into the market for a long term period. We are seeing also real investors coming into the market space or the economy and investing big time, which has also given the natural investor that outlook that probably there's something that these other investors are seeing in the economy and in the market, and it has given them confidence to also toe that same line of being futuristic and not just being a short-term investor, a short-term trader. So that has actually helped the economy, and I believe going forward it will continue to boost and give confidence to the general investor when they see that it's not a situation where we have it all blown up, then it comes down again. If they see a continuous trend of sustainability in prices, continuous trend of sustainability in the profits that these companies are making, then investors' confidence would return probably gradually and then fully. So that's the way I see it.
A great one there. But what also can I'm looking at the NGX now back home again, do to attract more companies to get listed? Many say we still have many companies that should be listed on the exchange. What more can they do to lure them in?
All right. So I think one of the things that a number of companies are afraid of is to come out fully naked before the public. And with all the regulatory issues, I think the regulators need to be more friendly in terms of what the requirements are for listing on the Nigerian Stock Exchange. They need to also be more accommodating and having a humane face generally with all the capital markets operators. They should see every operator as a potential as someone with the potential that can help in developing and growing the economy. I think if the regulators see it in that form, whereby everybody matters, everybody is involved, and you can tap from the knowledge and from the strength of everybody, then we'll see the market attracting more companies, and we'll see less companies also exiting the market, because that's one other thing. As we're attracting more companies into the markets, we should also prevent situations where companies that have been listed in the market, quoted in the exchange, will now be delisting again. So I think it's a two-way thing to get people in by being more proactive, by seeing everybody as partners in progress, and also by ensuring that through your policies, through your regulatory acts, that people are not leaving the market, but rather they would want to stay in the market because there's more benefit in staying than leaving the market.
I must thank you so much there, Mr. GBENGA OGUNRINOLA, investment manager and accountant, joining us from the UK to look at the performance of the market. We appreciate your time.
Thank you very much for having me.